Hello, traders. It's Wednesday, May 21st, 2014. It's 8:12 a.m. Chicago time. Sorry about the delay. Google Hangouts decided that I needed to restart, so it took a couple minutes. Thanks for sticking around. Trading futures, options on futures and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Oh, man. Sorry about that. So let's quick run through our overnight news, any driving news on the overnight action. Key elements, the BOE meeting minutes came out and they showed a unanimous vote for both interest rates and the APF. Rates were held at 0.5%. The minutes, though, showed that said it could argue that the more gradual the intended rate changes, the earlier the BOE has to start. So what this is saying is if the BOE's intention is to raise rates gradually, then it needs to start sooner. They're saying there's 1 to 1.5% in spare capacity. UK retail sales ex-autos month-on-month came out much stronger than expected at 1.8 versus 0.5, and Bund futures fell on a 3.772 billion euro auction. Bund just came off the low of 145.81 by about let's see 9 ticks, but that immediately following that auction, the Bund fell and has not recovered much since then. Looking ahead, at 9 o'clock Central, just a half hour after the cash open, we have the Eurozone consumer confidence expected at negative 8.3. 9:30 today, crude oil expecting 0. Distillates negative 500,000. Gasoline inventories 0. Today has quite a few Fed speakers. We have Fed's Dudley at 9. Fed's Yellen, the Fed chair, at 10 o'clock Central. Fed's George at 11:50 and Fed's Kosher Lakota at 12:30 today. And then immediately after Kosher Lakota, just a half hour later, 1 o'clock, we have the FOMC minutes, expecting to see some action on that release. Let's look at yesterday's market action and kind of narrate what we saw versus what we expected, and therefore create an idea of where we're headed. So if we look at my short-term chart here, the market opened at 80.50, open auction in range, traded both ways. It tested one tick up before dropping to the LVN of 78 and 78.75 that was left behind yesterday. I mentioned it in the second hypothesis yesterday. Bounced back up to the opening swing, so we bounced right back up to the opening swing, and then we fell off and continued to play out hypothesis number 2, which said, let me see, the hypothesis number 2 was to open, expect to test higher to possibly break this week high at 83. Could not get anywhere close to it, but it tried to push higher. It only got a tick, and then pushed to 78.75, which is what I just discussed, this LVN right here, left behind from Monday's action. The 77 is next, the HVN, the high volume node here, 77, and then all the way through to 70.25 would be next if no buying came in. And what the market ended up doing is it did just that. It went to 78.75, pushed back, dropped to 74, pushed all the way back into the opening swing. The line, this blue line here, the dashed line, is the opening swing low. Pushed in there, pulled back to the mid. It looked like it was ready to start pushing higher and start implementing hypothesis number 1 or following hypothesis number 1. Put in a double top, surprisingly, and then it failed lower. So it seems like in this action here, quite a few people got caught. You can see it in the delta here, a large delta drop. As we went back and took out that last low. This was all this was generally a stop run here, as you can see in the delta. And then it continued lower, and where did it stop? It stopped at 1864.75 against that key 1864.50 point of control, composite point of control, and micro composite point of control. Then we found some support sideways, a test of the mid and VWAP of the session before it rotated back down from 1873 to 1868. Pretty decent 5-point rotation right off the mid there, and the LVN for the day. So I marked this key LVN at 73.50, and I'm watching it for a play today. So that's where we are. Overall, the NVPOC for the VPOC from Monday was not tested, so that continues to be naked and is likely to be a magnet. And then on top of that, yesterday's VPOC was moved lower, value was moved lower versus the day before, and price action is lower. So the market's rotating back and basically behaving like it is in balance, and it is. Profile is a double distribution, almost a triple distribution, so we can see this as one distribution and a second distribution with the line in between here at 73.25. We can also see this as three distributions, one here with the neckline right at the 70.75, the next neckline at 73.25, and then the upper distribution. I'm not sure which the market will respect, so I'll be watching for that. Oh. 73. ELVN 73.50. I marked this on the wrong chart. Anyway, so looking ahead, the ES continues to be in this tight balance that's been running for several days. So here, within the bigger balance zone that we've had since February 14th, we continue to have this sub-balance zone that has been created since last Thursday. So we're trading this last Thursday range from 59 to 83, and that's where we're stuck right now. 67.25 is the most traded price in this area against the 64.50, the most traded price in this since October 9th. So we are in balance of balance. That's what it looks like. So the MCV-POC here at 67.25 in play today. Need to keep an eye on that. I still see a weak high at 83. So if we look at this profile here, you can see that this high suddenly drops off. It's not a taper like we see here. Okay. So I'm still expecting a breach of 83 and a test higher into that naked point of control left behind Monday. That naked point of control is at 81.50. I'm sure you recall the 81.50 from last week. The overnight session, sideways action with an upward skew towards the 75.25 gap zone low. So if you recall from last week, there was a gap, and we left 75.25 open on that gap, and then we ended up closing it last week early. So the gap is from way back here, 75.25, this gap zone. We filled it in last Thursday. We came back to it on Friday, right up to it, and held 75.25. 75.75 is the high of Friday, and then we pushed through it again on Monday. We fell through it yesterday, and right now the high of the overnight session is right at 75.75 with a weak high. So early going into this session, we have three distributions again on the overnight. There's no consensus on overnight prices. The profile is not boxy. The overnight volume is in line with the 20-day median. It's at 206,000 versus 225. It's close enough. We're currently trading right inside of yesterday's value and yesterday's distribution. So what are we expecting for our primary hypothesis? The primary trade for the day, the primary plan, is for this to open, to test higher early, and then to get responsive selling back to 72.75 and to move back towards 70 and a quarter to find a base. If there's any buying left, given yesterday's action, selling action, if there's any buying left, I expect it to fight back at 70 and a quarter. Otherwise, we're looking at pushing back down to this 67 and a quarter again, which puts us right a stone's throw away from the overnight low. So overall, the primary expectation for today is for this to, even though it's right up against the overnight high, is for it to try the overnight high, because we do have a weak high overnight, and then to rotate over and start moving back into what it did yesterday. Again, we are in balance. We did reverse the movement of the point of control value and prices by a lower high and a lower low. The expectation is that buyers will kind of spend their ammo early before sellers step back in and retest this value again. So I'm expecting a test up to 76.50, 76.75 before the market rotates back down and starts to move its way back through to 70 and a quarter and 68 and a quarter, and then again this composite point of control at 67 and a quarter. That's my primary expectation for the day, the highest probability expectation for the day. Again, this is not a trade recommendation. I'm just going over my plans with you. The second expectation is for it to not test the overnight high, leave it for now, and then immediately get responsive selling. So the selling that happened yesterday takes over again at these higher prices that we drifted to overnight. Responsive selling early to find a base around 70 and a quarter, turn around and start moving up, take out the weak high on the overnight, and then start walking its way to 81.50, and then the weak high left behind on Monday at 83. That's hypothesis number 2. I'll hold the other ones. I'll hold the other ones. The headline risk, the potential risk today, the headline risk is the fact that we have 4 Fed speakers, including the Fed president, in addition to the FOMC minutes later in the afternoon. So a lot of times these comments come out early and they're interspersed when these talks are so close together. So we might have headline risk today. So be cautious on that. In closing, I want to remind you that your goal to be here, for being here, if you're seeking to improve, is to set goals. It's very, very important to have some sort of a target that you're reaching for, and a target does not have to come in the form of dollar amounts gained for the week or whatever. If you're not consistent, if you're still struggling or see a pattern of inconsistency in the outcomes of your trading, a target could be as simple as aiming to eliminate errors. There are many errors. There are at least 6 errors that I can name that traders commit all the time. And your target may be to go through a week where you only allow yourself a maximum of 1 error a day. Errors are not you bought and you got stopped out. That's not an error. That's just a trade decision that didn't work. An error are things like planning a trade and not taking it, waiting for too much confirmation and not taking it. That's an error. You're not executing your plan. So errors are things that you're doing in contradiction to your plan. So the first error is not taking a trade that's planned. The market you wait it out. The market gives you the area that you want to trade. You do not take the trade because you're waiting for confirmation or whatever. Second error is preempting a move or trading what you want the market to do versus what you said it would. In other words, you don't have a solid plan that you believe in, so you're basically jumping the gun on your trades. A third error is chasing the market, deciding that because you didn't catch the long that you had planned to take, now you're going to look for a short. The market can't keep going higher on that big trade you had planned out last night, so now you're going to look for an area to fade it for a scalp. That's an error. Another error could be you put the trade on, You tell yourself, I have a 2-point stop and a 3-point target, and then you put on the trade. It goes against you 3 ticks, goes for you 2 ticks, goes back to scratch. You close the trade. That's an error. You've planned the trade, you've put on the trade, and now the monkey within you is not able to withstand the risk that you have set out to take on the trade. You made a trade decision. You got smarter during the trade. That's an error. So these are typically, there are others. Things like you intended to sell and you bought, which is a platform error, a technical error, and things like that. So, set out a goal that you will not commit more than 1 error a day. Errors, if you track errors in your journal, you will be astonished at what they really cost. And many of Stage 5's traders have learned to keep a pretty detailed journal and are tracking errors, and they can sum the errors that they have committed and what the real cost is, and it's staggering. Good luck today, and watch your risk. Take care.